Hello and welcome to this special report at XM.com. I'm Maria Pachurdis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming OPEC meeting on Monday and how the outcome may affect oil prices. So Marios, earlier this year, due to the pandemic, OPEC and its allies drastically cut oil production. Now it has to decide whether to keep those supply cuts in place. What do you think the agreement will be this time?
Hello, Maria. Well, I believe that OPEC will be forced, in a sense, to extend the current production cuts it has in place. Now, let's back off a little bit. We had the vaccine news lately. Those really boosted oil prices. Since the first vaccine news came out, oil is up 20% almost. So that tells me that the markets are pricing in a brighter demand outlook for next year. But that is a story for the middle of next year. Right now, demand is suffering with lockdowns in Europe and increasing restrictions in America. So I believe that OPEC will have to maintain its current production cuts. And the question for me is how long this extension will be. Now, if you listen to what OPEC sources have been saying, they suggest we are likely to see an extension of 3 months. I believe that extension is already priced into the markets, given how rapidly oil prices have risen in recent days. So the point is, if OPEC wants to boost oil prices, it has to deliver something longer than 3 months, perhaps. So in general, if you are OPEC, you always want to over-deliver with events like this one. Higher oil prices suit every producer, so ideally you want to prepare markets for a 3-month extension, but then deliver a 6-month extension, for example, and boost prices. That's what the cartel collectively wants. But within OPEC, there are some deep divisions. Take Libya, for example. The nation is coming out of a devastating civil war. It wants nothing to do with any production cuts. Iraq is a similar story. The UAE and Nigeria also feel that their production quotas are way too low. So even though OPEC wants to over-deliver, I think it's going to be difficult to even agree the simple 3-month extension that the markets are looking for right now.
Okay, so what are the risks surrounding crude from this event?
Well, I would argue that the risks are tilted to the downside. Markets seem to have fully priced in this 3-month extension. So if OPEC just delivers that, a 3-month extension, I believe we're likely to see a sell the fact reaction in oil prices, a little bit of a disappointment and some retracement in oil prices. If they deliver a 6-month extension, that would be a surprise for the markets. We could see oil prices rallying, but I believe that's much, much harder to agree. So I see some downside risks in the near term, but in the bigger picture, I'm quite positive for next year. Here's why. There's been a lot of underinvestment in the oil industry in the past half a decade, really. But this year we saw this trend accelerate dramatically with the pandemic. Investment, capital expenditure fell across the board. A lot of oil rigs were shut. So I believe that next year, once the pandemic ends and demand starts to normalize, production may not be enough to cope with demand. It takes a long time to bring rigs back online, and during that time, we could eat through a lot of the inventories that have been accumulated this year, and that could help bring the market back into balance. So some downside risks, I would argue, in the near term, but clear skies for oil heading into next year.
Marios, thanks so much. And thanks for joining us at XM.com.